In my career, I've met many, actually, joint CFO, COOs, but it's a really interesting dual role where maybe at times you conflict with yourself because you have to manage the numbers and you have to run the operations of the business. What's that like?
Well, first of all, thank you so much for having me here, Ed. I really appreciate it. That's right. I have to hold both things, aspiration and discipline. Aspiration because the market opportunity that we're going after is vast, over a $200 billion TAM across financial services and commerce. And discipline because we want to do that with ruthless focus on unit economics and holding ourselves accountable to returns on those outcomes. And so as a COO and as a CFO, I'm very focused on both and continue to show, to demonstrate our progress towards our investment framework and financial targets of being a Rule of 40 company in 2026.
The stock is down 18% so far this year. There are multiple stories coming with Block, some of it very closely tied to Bitcoin, and we can talk in a little bit about strategy. But where would you say the company is at right now, in where you're trying to get it to?
I think that we have a tremendous opportunity ahead for growth. If you look at Q1 at an $8 billion annualized gross profit scale, we were growing over 22% year over year. To be at that scale and to continue to demonstrate growth, we clearly are serving very important needs on behalf of our customers, whether small businesses with Square or the over 54 million monthly actives for Cash App, which are individuals. We see a significant opportunity to do more of that. We're early. We use technology and AI to underpin all of our products, and we're focused on improving our product velocity to ship more products to our customers.
You are early. And in many ways, Amrita, regulation then has to play catch up. I mean, it's not missed on many that they're trying to bring financial and technology regulation into the 21st century. That's what the last sort of Congress vote was actually on. And I'm interested as to whether you think regulation is there in the right place for you at the moment with Block, because there is lots of investigations and there's lots of people trying to get their head around the future of crypto and payments.
That's right. And we welcome regulation as it appropriately serves consumers. We work with regulators. We look to build a healthy ecosystem for our customers. It's our top priority to maintain a safe, secure platform that builds trust over time. So ultimately, that's good for Block.
Trust over time. There has been some concerns around, for example, money laundering worries, trading within sanctioned countries, which, of course, I know is being investigated at the moment when it comes to Cash App. How are you working with regulators in that to ensure that you are bringing the level of transparency I'm sure you have internally to those externally?
We take any of those allegations extremely seriously. We're working by investing in the appropriate areas that, again, build a healthy and safe and responsible platform for our customers, including our compliance teams, our product teams, our risk management teams. We are always open to feedback and want to create that appropriate dialogue with regulators, policymakers, and our company, along with our customers.
Amrita, when I moved to San Francisco in 2018, Jack Dorsey was probably a little bit more closely associated with what was then called Twitter. And a lot's changed since I've been here in the last 6 years. He's now at Block, and what is that like working with him, your relationship with him and the role he plays day to day in the company? And when I look at the Bitcoin news that came out recently, how much is that where he's focused?
Of course, Jack is a visionary. He's now not only running our company, but also running Square. And so I would say that the vast majority of his focus and our focus is on our two mature ecosystems with Square and with Cash App. With Bitcoin, we have a stake in the future where money can move at the speed of the internet. And we think Bitcoin is the likeliest contender to enable that vision because it is resilient. It's been battle tested. It's secure. It's transparent. It's fairly liquid. And so, what we see as we look around the world is that often the most underserved customers are the ones who have to pay the highest rates to access their money or to move money around. We think Bitcoin has the opportunity to change that. We, of course, are going to be disciplined and prudent in how we invest towards that future. Less than 3% of our OPEX goes towards Bitcoin experiments and initiatives. But it could be a potentially transformative one.
I'm really interested in the investment side of it, Amrita, because, yes, you're building product and can entirely understand why you'd want to experiment for the good of the consumer. But why the balance sheet? Why continue to have 10% of gross profit going into Bitcoin products as well each month, and indeed keeping it as an investment on the balance sheet?
Yes, it's 10% of Bitcoin gross profit, which is less than 5% of our overall gross profit. So it's a fairly modest sum. And what it helps us do is actually learn. It helps us understand what it means to custody Bitcoin, what it means for our treasury teams to be out in the market buying Bitcoin, what it means with respect to insurance. There's a lot of different things that we get to learn from this relatively modest and small investment in the scope of our much broader balance sheet.